In this section, we will analyze the recent breakout of NZD/USD above the resistance level of 0. This level was tested several times in the past few months, but the pair failed to close above it until July 21st. This breakout signals a bullish momentum for NZD/USD, which could pave the way for further upside. One of the reasons behind this breakout is the relative strength of the New Zealand dollar compared to the US dollar. New Zealand has managed to contain the COVID-19 pandemic better than the US, and its economy has shown more resilience. According to the OECD, New Zealand's terms of trade, which measure the ratio of export prices to import prices, have improved during the crisis, while the US's terms of trade have deteriorated. This means that New Zealand can buy more imports with its exports, which boosts its purchasing power and currency value. Another reason for the breakout is the general weakness of the US dollar, which has been under pressure due to the massive stimulus measures and rising debt levels in the US. The US dollar is also seen as a safe haven currency, which tends to lose appeal when risk sentiment improves. As global markets recover from the pandemic shock, investors are shifting their funds to riskier assets and currencies, such as NZD and AUD. The breakout of NZD/USD above 0.6580 has opened the door for more gains in the near term. The next target for the bulls could be the 2020 opening price of 0.6733, which is also close to the 61.8% Fibonacci retracement level of the 2018 to 2020 downtrend. A break above this level could confirm a reversal of the long-term bearish trend and expose higher levels such as 0.7000 and 0. However, there are some risks that could derail this bullish scenario. One of them is the possibility of a second wave of COVID-19 infections, which could dampen risk appetite and boost demand for the US dollar. Another risk is the upcoming monetary policy decision by the Reserve Bank of New Zealand, RBNZ, on August 12. The RBNZ could signal more easing measures or even negative interest rates, which could weigh on NZD/USD. Therefore, traders should be cautious and use proper risk management techniques when trading NZD/USD. The breakout above 0.6580 is a positive sign, but it does not guarantee a sustained rally. Traders should watch out for any signs of reversal or consolidation below this level, which could indicate a false breakout or a correction. The NZD/USD pair has been trading in a bullish trend since the start of the year, reaching a high of 0.6305 on May. The pair has benefited from the strong economic recovery in New Zealand, which has prompted the Reserve Bank of New Zealand, RBNZ, to tighten its monetary policy ahead of most other central banks. The RBNZ has raised its official cash rate, OCR, by 500 basis points since October 2021, from 0.25% to 5.25%. The latest hike was a surprise 50 basis point move on April 5th, which stunned the markets and economists who were expecting a smaller 25 basis point increase. The RBNZ's aggressive tightening cycle reflects its determination to bring inflation down to its target range of 1 to 3%. Inflation in New Zealand was 7.2% in the fourth quarter of 2021, more than double the RBNZ's target and the highest level since. However, the RBNZ's hawkish stance has also raised concerns about the impact of higher interest rates on the economy, which has already slipped into a mild recession in the second half of the RBNZ expects GDP to contract by 0.6% in the first quarter of 2023 and by 0.3% in the second quarter. The RBNZ is now under pressure to moderate its tightening pace and signal a pause in its rate hikes. According to a Reuters poll of economists conducted on May 15 to 18, over 80% of respondents expected the RBNZ to raise its OCR by a final 25 basis points to 5.5% at its next meeting on May 24, and then hold it steady for the rest of the year. The RBNZ's May 24 decision will be closely watched by NZD/USD traders, as it could have a significant impact on the pair's direction and volatility. A 25 basis point hike could boost the NZD/USD pair further, as it would widen the interest rate differential between New Zealand and the US, where the Federal Reserve has kept its policy rate near zero since March. However, if the RBNZ surprises the markets again with a larger or smaller hike, or no hike at all, the NZD/USD pair could react sharply in either direction. A larger hike could signal that the RBNZ is still worried about inflation and willing to risk a deeper recession, while a smaller hike, or no hike, could indicate that the RBNZ is more concerned about growth and ready to pause its tightening cycle. In addition to the rate decision, NZD/USD traders will also pay attention to the RBNZ's monetary policy statement and press conference, where the central bank will provide its updated forecasts for inflation, GDP, and interest rates. The tone and guidance of the RBNZ will be key to shaping market expectations for future policy moves. The potential targets and risks for NZD/USD traders in the near term will depend on how the RBNZ's decision and communication compare with market expectations. If the RBNZ delivers a final 25 basis point hike and signals a pause until year-end, as expected by most economists, the NZD/USD pair could continue its bullish trend and test the next resistance levels at 0.6340 and 0. However, if the RBNZ deviates from market expectations in either direction, the NZD/USD pair could face a sharp reversal and test the next support levels at 0.6220 and 0.6150.